This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 24th, 2016. Euro dollar. So these latest setbacks in the euro off the 2016 high at 116.17 after stalling out by medium-term resistance up there do put the pressure back on the downside, with the market potentially now seen dropping down towards the 110 level. At this point though, we need to see how the market's going to handle this latest support around 112.17, which was broken, but the market's been comfortable consolidating around that level. A convincing break below 112.17 will do a good job of strengthening this bearish prospect and accelerating declines. However, inability to establish below 112.17 will put the pressure back on the top side in the interim. Sterling dollar. So cable has traded back lower after once again stalling out up towards 147. The market's inability to trade up above 147 for any meaningful period of time does leave the door open for fresh downside, keeping the broader downtrend intact. There is the possibility that this market is looking to carve out some form of a meaningful base, but it will need to establish above 147 to suggest that that is a real possibility. Dollar yen. So dollar yen continues to trade in a downtrend, with this latest rally out from 105.55 multi-month lows being well capped ahead of that previous lower top at 111.89, with the market now looking like it wants to roll over in favor of the next downside extension. At this point, the focus is on a retest and break below 105.55, with only a break back above 111.89 to compromise this outlook. Euro Swiss. So Euro Swiss continues to break higher, with the market now focused on a push towards a retest of the yearly and multi-month high at 112 further up. At this point, look for setbacks to be very well supported down towards 109, with only a break back below 108 to compromise this outlook. Aussie dollar. So Aussie continues to extend declines after breaking down below the 200-day moving average, and the focus now is on next key psychological barriers at 70 further down. At this point, look for rallies to be very well capped up towards 74.15. Dollar CAD. So dollar CAD continues to show signs of the formation of a major base, with the market now establishing back above 130 and looking to break towards next key resistance in the 132.19 to 132.95 area. At this point, any setback should be very well supported, with only a break back below 27.70 to compromise this newly adopted bullish outlook for dollar CAD. Kiwi dollar. So Kiwi remains under pressure into rallies, with the market now looking to establish below last week's low at 67.10. A break below 67.10 will do a good job of opening the door for fresh downside towards next key support at 65.46, which guards against the 2016 low all the way down at 63.47. At this point, only a break back above 70 would really compromise the outlook, while above 70.54, that recent yearly high, would negate and put the pressure back on the top side. SPX 500. So the S&P 500 continues to show signs of topping after stalling out above 2100, with the formation of a potential head and shoulders top. Look for a break below 2020 to really strengthen this outlook and open the door for an acceleration of declines down towards the next measure move objective at 1930. Ultimately, rallies should continue to be very well capped, with only a break back above 2112 to compromise this bearish outlook for the S&P 500. Gold. So although we've seen setbacks in gold in recent trade, the market is being more constructive over the medium term following that break several weeks back above 1191. At this point, this current round of setbacks should be very well supported ahead of 1200, with only a break back below 1190 to compromise that outlook. Look for the market to be supported ahead of the next major upside extension beyond that 2015 peak at 1307 and towards 1400 further up.